Hey, it's Michael Saul, but everybody calls me Tiny, and this video is, are the Bulls back in business, plus one new stock to watch. This is for the week of April 3rd, 2017, start of the second quarter. So let's take a look at what happened last week. We left off the week with this spinning top at the 50-day moving average. On Monday, we gapped down, but closed well, traded higher, went a little bit lower, then traded higher throughout the day. Now, this is either a hook reversal or a key reversal. I don't care. It's a reversal, what the name is. What I like about it is that it happened below the 50-day moving average, the open, and then the close back above it. That's a strong sign for the Bulls. Okay, and then, of course, the follow through the next day. So what am I looking for here? And that's my text messaging, by the way. I don't really have a dog. And I don't know, you're dying to know what the barking is. All right, anyway, so then we came up and I drew this line in just now. So this isn't like, oh, we tested this line. This isn't a real trend line because it doesn't connect 3 points. It's real easy. You can always connect 2 points. That is not a trend line. A trend line has to connect at least 3 swing points. But what can connect 2 points is a coil or a triangle. Now, is this a coil? Yeah, it is. I'd like to see one more test of the bottom line also. When you get something like this, which is a 2-1, 2 points here, 1 point here, I mean, the breakout can go either way, but it's not as strong, in my opinion, as if you get multiple touches. All right? Something like this, you saw up here, and then boom, it went. Even like something like this, it came down, and then, went. So we do have a coil here. I am going to be watching for a move out of this coil. I'd like to see some weakness here to maybe plant a flag, and I don't mean the flag as the pattern. I mean it just as a terminology. Plant their flag and then decide what they're going to do, but that doesn't mean that has to happen. Friday was a pretty narrow range candle. Okay, you could see compared to what we've been doing. We did close below the open, but it wasn't that big of a deal. It was down about 0.25%, but not much range. So to answer the question, are the Bulls back in business? To me, I really need to see them step in here and start pushing it. Otherwise, no, I don't think they are. Again, don't think we started a bear market. Don't think we're going to have this monster, crazy correction. But I do think we can have a pullback / correction that lasts a little while. I'm not coming off that opinion that I've had for the past few weeks. All right, this was a couple of weeks here before it decided to go. I think this one could be complex. I think it could take some time. I think it could bore the living crap out of the market participants, especially due to the volatility or at least the upside oomph we've had recently. I mean, this was some volatility on this first pullback here. I mean, could we just see the VIX start to spike, and could we start seeing wide range of volatility? Yeah, it's possible. We are coming up into the sell in May and go away, and I still stand by my assertion that I think it's going to be a doozy of a sell in May and go away. Again, I don't think we start the bear market or anything like that. I just think that people are going to come to the realization that they're up a lot of money since the election. Even after this little pullback, they're going to start talking about sell in May and go away, and it's going to, like it has been lately, when it does occur. It doesn't always occur. It's not 100%, but it becomes sort of a self-fulfilling prophecy. And there's nothing wrong with that. Doesn't mean you can't use it. Like, I love when people go, oh, that's a self-fulfilling prophecy. What does that mean? Doesn't mean you can't protect yourself. Doesn't mean you can't make money. Okay? So, again, I'm not a big fan of, as soon as it's May 1st, it's going to happen or anything like that. It's still a month away. A lot of things can happen. We could break out here out of this coil and just rip it up to new highs. But I really want to see us take out this tall red candle. That's going to give me more confidence that we're going back to new highs right from here. I think eventually we do take out those highs. I'm talking about right from here on a coil break. And of course, could it fake out? Could we take out that distribution candle and then come back? Sure. But one day at a time. That's the way that I like to, quote unquote, time the market. Okay, seasonals are great. Selling May is great. Maybe we rip it and rally in summer. I'm not saying, hey, let's just sell May 1st or sell May 15th. Absolutely not. It's just something to pay attention to. Seasonals are important, but they're not the be-all, end-all. Okay, let's keep going. Here's the NASDAQ, new high, and then a little bit of a reversal there. Here's the Russell, lagging a little bit, has to get above this candle. Not lagging as much as it was, so that's a good sign. The mid-caps and the diamonds. So diamonds are actually lagging the worst. That's the Dow. Okay. So, of course, I'm not concerned that the Dow is lagging because the Dow does not lead. I'd rather watch the S&P 500, but I'd really rather watch the relationship between the Russell, the NASDAQ, and the S&P 500, those three, and how they're acting. And the NASDAQ obviously acting the best. The Russell, had been lagging, and it looks like it's trying to step up a little bit here. So, let's see, maybe the small caps can lead a push. Maybe April can be a nice month. Hey, like I said, maybe May could be a nice month also. Just don't think that it's going to be, hey, we've pulled back enough, let's try to rock and roll. But if we take out this distribution candle, I will turn my opinion around and look for more upside. Okay, again, just to be clear, I am not looking for a new bear market to start or anything like that. Don't even know if there's short signals here. I just think it's going to be more of a complex type of correction. Like you see this, lasted a few months, something like that, bores you to death, and that could happen across the entire market. There's still stocks to look at on both sides, long and short. So, if you're a stock picker, there's not going to be a shortage of opportunity. It's if you're looking for a complete top-down approach, and I'm only going with the market, blah, 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 then it's a different story. I'm going to look at gold and oil early here. Usually I do this later on, but I'm going to do it earlier in the video. The gold is at the 200-day moving average. Possible double top. If it gets taken out, that would be a double top takeout. But gold GLD has its work cut out for it up at 125. That's the real number that we want to watch. And then oil on the bounce here did not get down to these November lows. I want to see what we do here. If we start to stall out, watch the 200-day moving average. It's coming in right about 50% of this tall red candle. All right, let's look at some sectors now. Semiconductors, not the SOX. Oh, the SOX. Okay, semiconductors acting okay. Here's Cloud Tanker. Here's Intel. Nice little push up. Okay, this pattern here that was scraping the 200-day moving average could have easily rolled. Instead, it pushed up. Some rejection after the break of the 50, so we have to see if this sticks, but it's a good sign at least to start. Okay, here's ADI, here's MU. How about Click? I like Click. It's just consolidating here. NVIDIA. Okay, so NVIDIA popped out of this coil. Another coil we drew in last week popped out of that one, but let's see if it can get above 110. Got an email saying, hey, forgot the banks last week. My apologies. So here's the banks this week. I won't forget this week. Came into the 20 EMA, little bit of rejection there, but no big deal. Then the pause on Friday. Here's Bank of America. Looks the same, holding the 50-day moving average. If this can't get through it here, look for a retest down to 22 at a minimum. And if this ledge breaks, we got a potential try for that 200-day moving average. JP Morgan, if I could put the right symbol in, it's always a good start. Same kind of pattern. Citigroup showing some relative strength up above the 50 and the 20 EMA. Here's Bank of New York. Okay, let's also showing some relative strength. Let's look at the broker-dealer on the bounce, see if it can get above the 50-day. If not, then perhaps more downside is to be seen. Goldman Sachs, yeah, underperforming the sector here. It's not a bear flag because there's no real impulse to the downside. It's more of being in a range here. But yeah, I'm not too confident that this is going to blast off. It looks more like it wants to come back down and at least test the 220 area. If not, this gap fill down here at 213. Let's look at some of the glamour stocks like Amazon. Wow, just ripping. No wonder the Nasdaq's doing so well with stocks like Amazon and Apple, and there's Alphabet. I mean, definitely not doing as well as Amazon, but not doing horrendous either. It's right caught between its 20 EMA and the 50. See what happens there. Netflix up at the highs there. Microsoft pushed up to a new high. How about like a Cisco? That's still drifting here. Caterpillar, still sloppy. John Deere, scraping here, the underside of the 50-day moving average. See if this holds here or if it is going to continue to pull back here. Again, I don't have a short signal here, but it could pull back down to the 105 area if this holds as potential resistance. Bonds. So bonds are back in this pattern that they broke out the downside of and then came back up through. So now we want to wait again to see which way is it going to go from here. Sometimes it takes a few false starts before it finally gets moving. All right, so there's bonds, there's the TLT. And the new stock to watch this week is going to be Ford Motor. Okay, so here's the pattern. You have a coil here. Actually, it's a pennant because this is the impulse. So it was sideways. You had a sideways line, broke down. That's an impulse, and it is now in a continuation pattern. But of course, wait for continuation. Should come down and try to test this low down here. It's not a huge mover, but it could be a nice little percentage gain. And of course, because it's not a huge mover with big volatility, it's a bit easier to manage your risk. Okay, any questions? Tiny@attackthemarkets.com. But again, I'm going to reiterate my stance here. I do not think a bear market has started. I just think we're in for a more complex pullback / corrective type market here. I do believe there will be a sell in May and go away. That doesn't mean I believe it's happening on May 1st or anything like that. It's just something to pay attention to. Seasonals are great to use as background. Always use the charts and the patterns first and foremost. We are currently in a coil here in the S&P 500. See if we break either way. I will talk to you next week or through the daily email at attackthemarkets.com. Sign up. It's free. Here's how. Talk to you soon.